Good morning. Happy Monday to you. Thanks so much for tuning in. This is Buy Now, Sell Now on ET Now. My name is Alex Matthew, and with me is Cheryl D'Souza. Let's very quickly take you through what's happening in the markets as of now. And it was a strong start, and then we had a brief phase of tepid trade where we were more or less flat for the benchmark indices, and we're back now about 0.3% higher for the Nifty 50. Now, we've traded in a very narrow band today, about 100 points, and at this moment, the Nifty 50 is trading about 200 points off its lifetime high. So we are within touching distance of that mark. Technical experts have pointed to 15,200 as a critical level to breach and hold. As of now, the Nifty 50 is doing that. I won't go into too much detail in terms of stock specific information. Cheryl will tell you the stocks that are buzzing in trade, but in terms of the sectors that you have to bear in mind, only a couple of sectors lagging in trade. The metals counters are looking a little weak in trade today. JSW Steel particularly losing ground despite posting quite a good set of numbers, and the FMCG pack is losing about 0.4% to 0.5% or thereabouts. All of the other indices are gaining in trade. Nifty Bank, in fact, has added a little momentum over the past half an hour or so. It's trading with gains of over 0.9% at this stage. The broader markets are outperforming the benchmarks at this stage. You have the mid-cap index that's gaining about 0.5% and the small-cap index that's gaining about 0.8%. Cheryl, morning, over to you.
Good morning, Alex, and happy Monday to you as well. Let's talk about stocks that are in focus, but first I'll talk about the metal sector. Actually, they are lagging in trade. Also, you've seen the global base metal price also decline. This is on back of China saying that the government will show zero tolerance for monopolies in spot and future markets of commodities and for speculation and hoarding. So this has come after it has intensified. It's a week-long campaign to cool off the raw materials boom that we are seeing in the prices. So that is one of the reasons why you have the metal counters that are under pressure today. You have JSW Steel that is finding a mention in a BNS and stock cloud of the day. This is on back of its earnings, but you see, despite good earnings, that particular counter under pressure. Tata Steel is in focus. The company is likely to replace ONGC and Sensex on June 21st. You have Hero MotoCorp that is in focus today because the company said they started manufacturing at all facilities. Natco Pharma, that particular counter is surging in trade. It's at record high levels. It's got US FDA approvals for a couple of products, which is including a cancer treatment drug. Also, they've said that they've started a phase 3 trials for one of the COVID-19 treatment drugs as well. Birla Soft, bumper earnings coming in for that particular counter. And SBI, it is the stock that is in focus today. It is a part of the BNSN stock cloud as well, and also BNSN Spotlight. SBI, good earnings coming in for that particular counter. You have a couple of brokerages that have gone ahead and they've upgraded the price target, continue to be bullish on SBI. And like I mentioned, that indeed is the part of a BNSN Spotlight. So let's get on board Poonam to take us through SBI's earning. We know that the asset quality was much better than other banks. So Poonam, fill us in with all the details on SBI.
Well, a fairly strong show coming in from State Bank of India, and as such we are seeing quite a lot of brokerages going ahead and upgrading the target price. In fact, we did see SBI's asset quality far better than expectations. SBI gross and net loans were the lowest in the last 5 years, and if you look at the impaired loan formation both from on a gross basis or net basis, it is similar or lower than quite a lot of the large private sector peers. In fact, SBI's gross impaired loan formation stood at 2.3%, similar to HDFC Bank gross impaired loan formation at 2.3%, and SBI's net impaired loan formation stood at 1.6% for FY21. We've seen quite a lot of brokerages going ahead and upgrading the target price. CLSA maintains a buy. They have gone ahead and upped the target price to 650 on the count of Q4 beat. They also did say that FY21 slippages were less than 1.2% of the loans They were the best in class. Corporate credit cycle clearly turning, and retail slippages are less than 0.5%. They conservatively expect SBI's ROE to inch up about 15% by FY23, and they do state that the current valuation at 0.7x March 23 book are fairly undemanding. Goldman has a target price of 648. They do believe that they see ROAs of 1% and ROE of 16 to 18% by FY23.
All right. Of course, scale is important when you bear in mind the slippages percentage. 1.5% on the scale of SBI's book is still significant. Having said that, we spoke with the management earlier today, and SBI reported its strong set of numbers as we've just taken you through. We asked MD Ashwini Bhatia about what he thought led to the upbeat performance. Listen in.
Repeated focus on our large credit book, our underwriting, the fact that the entire credit process has changed, the fact that we are today more aligned to markets as far as our pricing is concerned, and of course the fact that we, I think, have become a little more nimble. Digital has helped. On the retail side, the fact that we can sanction loans digitally online is a big plus. The fact that our housing book is today beyond 5 lakh crores. All of these things do give us a lot of confidence. The fact that the retail book today accounts for a very large chunk of our overall credit is another positive. So the cleanup has happened, and it took us 3 years. You can only look forward with confidence.
All right. So SBI is the top gainer on the Nifty 50 as we speak, right now gaining over 3%. And it is a vindication, today's move and in fact Friday's move, of the individuals, the fund managers, the research guys who said that SBI is one to bet on in terms of earnings. Let's get on board our experts for today. We've got Kunal Bothra and Vijay Chopra joining in. I want to start with you though, Kunal. Quite a lot of strength being seen on the charts for SBI. Is that likely to continue? Is there a lot more steam in this run that we've seen over the past couple of sessions?
So good morning, Alex. Morning, everyone. So I'll show you some interesting perspective on the charts, and what in technical parameters we generally call it as a rhythmic behavior, which means history may not repeat itself, but it tends to rhyme for a certain set of stocks and certain set of time frame, looking at certain set of price patterns. So for the price patterns for SBI, I think it's very, very intriguing. So what I'd marked up in the charts, which I had posted earlier, was SBI had given a breakout as such in the month of December, January. Post that, the stock had gone to a 3 months of consolidation and then given a breakout on the upside. A very similar kind of a phenomena which you've seen for SBI was somewhere almost 8-9 months down the line as well, when the stock had given such a kind of a 3-month breakout. And when that happened, you saw the stock moving almost 30 to 35% higher beyond those breakout levels. Now, if you try and compare, so as you can see on the charts, what I've marked up, for SBI was in the month of August, where you'd seen the stock making a top. Then it took 3 months of consolidation and then managed to break out. That breakout was so strong that it led the stock moving into a different range altogether from those traditional 250 and 260 levels, which we were accustomed to seeing in SBI. And beyond that, you saw the stock moving up significantly higher. You see a very similar kind of chart pattern shaping up for SBI, even at current levels. It's heading towards a breakout of a 3-month consolidation. I think post this breakout, I would sense that the stock could go back into a different range altogether. And probably over the next 3 to 6 months, you might see another 15 to 30% upside over the medium-term time frame. So extremely bullish on PSU banking names, specifically on SBI.
All right, extremely bullish on PSU banking name, especially SBI is the word coming in from Kunal, but also USL also came out with its earnings. Let's hear out what the management is saying while they address in their con call.
Our growth was 19% if I remove Andhra Pradesh from the base in the most recently concluded quarter, which is quarter 4. and our P&A business without AP grew by 31%. Now, this performance, albeit on a somewhat softer base, we believe is strong. And in many ways, it just reflects the resilience of this business to bounce back when markets open. I also believe that in every quarter of the last year, we have outperformed competition in terms of our mantra of emerging stronger. I think importantly, we have seen a recovery of margins as well. And I think that really bodes well for the future of the business. So, with that context, let me dive a little deeper into today's agenda. So, I'm going to talk a bit about what's beneath those results through our strategic priorities, then hand you over to Pradeep to talk about our financial highlights in some more detail, and then I'll come back to move from looking through the rearview mirror to looking through the windscreen. So, as you all know, our performance ambition is to be one of the best performing, most trusted and respected consumer products companies in India. And this is what drives the passion with which we pursue every priority in this business. And I'm sure when you read this, you will be able to connect with some of the stuff that we have done during this pandemic. The delivery of this performance ambition is built around 5 strategic priorities: to strengthen and accelerate our core brands, to evolve our route to consumer from being a push-driven organization to a pull-driven organization, to drive productivity so that you can invest in growth and also deliver improved margins, corporate citizenship, and finally to build an organization that is...
All right, that's the management of United Spirits addressing in the conference call, talking about their performance and the way forward for the company. All right, on that note, we'll slip into a break in this edition of Buy Now, Sell Now. But stay tuned, more on the other side, so don't go anywhere.
All right, welcome back. You're watching Buy Now, Sell Now. All those of you who are tuned in live on social media, thanks so much for joining in. We'll come to your queries in just a short while. I'm going to start with the high risk and low risk ideas though, Kunal. Of course, Vijay, sorry we had to interrupt, and hopefully you'll be able to tell us your view on SBI. I think somebody will have a question on that. But I'm going to request you to keep your answers on this one very, very short in the interest of time. Kunal, starting with you, what are your high risk and low risk ideas for us?
So 2 buy calls, Alex, I'm expecting a big surge coming in the PSU theme. So I picked up NTPC as a buy, targets to be kept at approximately 125, stop loss at 108. And the second again from the auto pack, where I believe that the strongest stock should do exceptionally well. So I picked up Bajaj Auto, the one which is looking extremely formidable on the charts, raising my targets higher to 4,400 on Bajaj Auto from the earlier given levels of 4,250, and stop loss could be kept same at 4,055.
Vijay, good morning to you, and so sorry we had to cut you off earlier, or rather we couldn't come to you. What are your high risk and low risk ideas?
I would recommend 3 stocks for today. Good morning, Alex. My first call would be SpiceJet, with an expectation that things would get normal with vaccination going on, and hopefully by the end of July, as the government also expects that the vaccination drive is going to be very aggressively done. So SpiceJet seemingly looks good with a with a medium-term perspective, presently trading at 78. One can buy for a target of 90. My second recommendation is a buy call on L&T Finance Holdings, which is again a great company, great lineage, great management, and great business model as well. So I think that monsoons are going to be good, and we might see a good loan activity happening in the tier 2-3 towns, and L&T has a very good nationwide network. So presently trading around 90, I think that this stock could be bought for a target of 110. And finally, another low-risk idea would be a Tata Group company called Indian Hotels. So I think that again, as we are seeing COVID waning down and normalizing of activities is expected in the coming months. So Indian Hotels trading at about 130 could be bought for a target of 150. And these three stocks I would recommend. And if you suggest, I can talk on SBI if you have time.
Sure, Vijay, we'll come back on SBI because we've got anyways a couple of viewer queries coming in on SBI as well. But first up, I'll start with the Twitter query that we've got from Himanshu Kumar. He's saying that he's holding three stocks of 3M India, which he's purchased at 26,200, and two stocks of Page Industries, which he purchased at 28,900 rupees per share. He wants to know the view over the long term, that is 2 years to be specific is what he's looking at. He wants to know whether he should continue to hold on to these stocks or should he exit or look for some other smart alternatives. So what's your take on both these stocks, Vijay, 3M India as well as Page Industries? And good morning to you.
Yeah, good morning, Sharon. I think that, he's bought a good stock. So 3M is a global company with a fantastic product line, and they are, coming with a lot of patents. So 3M, I would say that is a great company to hold, and I think that this can go up to 31,000 as well. Coming to Page Industries, I am expecting that the activities should be normalized over a period of time. So if somebody is looking at a company like Page, she should at least have 6 months to 1 year's perspective. And again, it's a great company. It has proved to be a bellwether and has bounced back very, very strongly, has made a lot of money for investors. So keep on holding this stock. And I think that it can also go to 35 and 36,000. So both these counters require a lot of patience. So be patient. You are into good companies. Just keep on holding them.
I'm constantly astounded by the number of patents and the varied patents that 3M has. But let's go to another counter, and this one is a short-term query relatively, Naveen Fluorine. And this is from Srinivas on YouTube. This one's for you, Kunal. A view on Naveen Fluorine for 1 year. It has had a significant run over the last 1 year. Will it keep that going?
So very difficult to say that, but I think the stock has been an exceptional runner since the last 6-7 years, from 2014 when the stock was just about 32 rupees to right now where the stock is at 3,200 rupees. I think it's done exceptionally well for itself. Over the next 1 year, the stock seems to be, since its trends are quite strong, it seems to be that the stock can continue to move up higher. Then I would advise some more of a buy on dips kind of an approach. I think 3,050 seems to be a good support level. So I think till the time the stock holds on to that kind of a support level, you can hold on to your near-term investments. And I think a buy and dip strategy could be a much better strategy for a stock like Naveen Fluorine. So I would suggest the buy on dips and hold on for the next 6 months to 1 year.
The next query has come from Santi on Excel Industries, saying the stock has broken important resistance level of 950, 1,025 recently. Wants to know the views of possible targets if it will reach 1,500 or 1,900 plus. He wants to know the views whether on a technical as well as fundamental front, whether he should go ahead and buy fresh into Excel Industries. So Vijay, I'll come to you. How does Excel Industries look to you? Make sense to buy this particular company at this level? Also, do you track Excel Industries?
I do track Excel Industries, and it's a good company into chemicals, and I think that chemicals and specialty chemicals have done well over the period of last 3-4 years, and Naveen Fluorine, as my friend mentioned, is also one of them, and they would continue to do so. So if somebody is there with a long-term perspective, I think that should not worry. We will see some kind of a correction happening, and it happens with the best of the stocks, and these are healthy. So I would say that if you are a long-term investor, keep on holding. Otherwise, you don't buy fresh. Wait for anything below 1,000 would be a great level to get into the stock. So as I said earlier, so I am a big fan of specialty chemical and chemical industries. Excel Industries is one of them, and it should do well over a period of 3 to 4 years. But yes, if you want to enter a fresh, wait for 1,000 odd levels, it will come down in any correction by below 1,000. But if somebody is holding with a long-term perspective, no worry at all. It will definitely come back.
Kunal, I want to come to you on this one, and it's not a stock-specific query. It's a question on the Nifty 50. So maybe a quick view on this. A few people are talking about 15,200 being a crucial level to hold for the Nifty on a closing basis. Is that something that you're looking at as well? And Sagar is asking, do you see targets of 15,800 on the upside?
Very difficult to say that how far the Nifty can go, but the breakout. So I think last week I'd given a chart bust on the chart buster segment. I'd mentioned about a triangular pattern breakout for the Nifty. The pattern height was approximately 600 points, and the breakout point was approximately 14,950. So if you remember, Alex, that a week or two back, or I think if I'm not wrong, last week on Monday, when the markets opened with a gap up, they managed to break past about that 14,950 in just a matter of that single day, resistance. So I think that level of 14,950 is a more credible support rather than 15,200. 15,200 could be a good intraday support, but you have to look at the short term or the near term support. So if 14,900 holds, I would sense that the 500 to 600 point breakout zone which I'm talking about, or the pattern which I'm talking about, could get replicated on the upside. So you can look at something like 15,500-ish as a more plausible target for the Nifty over the very near term.
All right, the next query is coming from Bhargav, talking about Borosil Renewables, looking at buying at current market price, saying that the stock had gained about 4 times in the last 8 months. He's saying the stock has reversed post the recent correction that is seen from the 225 rupees per share levels, saying that the lifetime high for this stock is around 400 rupees per share. So does it make sense to go ahead and buy the stock at this current level? Are we likely to see the stock rise further? So Kunal, on charts, how is Borosil Renewables looking for you?
I think it's a very solid chart, Cheryl. So even in the last 1 year, so there's not too much of a history, but frankly, over the last 1 year from the March 2020, it's been a stellar kind of a recovery, because I remember I think the stock was just about 30-35 rupees odd 1 year back, and now it's gone up to almost 10x kind of returns. So it's looking quite formidable. The good part about the stock in the very recent or the near term is that it's going through a consolidation phase. So I think in the month of December, it had hit a high of 300. And then post that, for the last 4-5 months, it's been going through a downward drift, consolidating. We call it mean reversion as such as well. So it's managed to come back to 225 kind of level. So it's a good mean reversion process, which seems to be completed for Borosil Renewables. And I think at current levels of 280 approximately, I think it's a good buy and hold. The stock moves into very into periods of fits and jerks. So for some time you might see the stock consolidating, but all of a sudden I would sense that you could see a breakout on the upside, and that breakout could take the stock higher to almost levels of 400, 450 as well. So I would suggest a buy and use dips as good averaging opportunities as well.
Okay, the next counter we're talking about is Tata Motors, and Neeraj Kumar has gotten in, I would think, at slightly elevated levels. This is a stock, of course, that plumbed the absolute depths, having fallen significantly below the 100 mark as well. Vijay, this is a view that he's asking for 2 years, and the latest that I read on this counter is that Jaguar Land Rover has cut its break-even production point by a third to 400,000 units. And that seems like a significant mark and a significant improvement in the profitability metrics on the back of the cost control measures that they've undertaken. Are you positive on Tata Motors?
I am. There are certain reasons. First of all, the company has reduced the debt to a great extent. If you look at the India perspective, now there were times when they had very few models to offer to the Indian market. So the Indian market has now shown some consistency over the past 2 years. Unfortunately, due to COVID, there have been a lot of crests and troughs. But I'm fairly hopeful on Tata Motors. If you talk about JLR cutting down production, now we have to understand one thing, that JLR has announced that 2025 onwards they are going to focus primarily on the EV segment. So there might be some strategic things happening. Number two, Tata Chemicals is already in the process of setting up a huge EV battery plant in UK, because they would require that kind of support from internal company, and it's also going to be a big hub for for global EV players. So I think that Tata Motors, with a longer term perspective, can be bought in dips. Of course, I won't say that just jump and buy right now, but I think any company which is reducing debt, which has great models, and it is a time-tested, JLR is something which the world loves, and we have seen numbers happening through China, US, and other European countries as well, where people like Tata Motors model. So I think that it's a great company. It is coming out of the blues, and just buy on dips, and I think that it can definitely go up to maybe 500, 550 levels.
All right, our next query is coming in from Ankit Garg. Wants to know the view on Heidelberg Cement for a longer term. I think Ankit is looking to buy Heidelberg Cement at current market price. So, Vijay, how does Heidelberg look to you?
Well, I think if you look at the longer term India story, I would look for opportunities in the cement space. And, Heidelberg is one company which I think, has done well over a period of time. And it has no major overhang of debt. The management seemingly is good, and the growth has been stable. But again, if you look at the cyclical nature of this business, traditionally sales do not happen around monsoon. And above all, we do not have shops open, and construction activity is not going on across the country due to lockdowns. But if somebody wants to buy with a longer term perspective, I think that anything below 230 would be a great level to get into the stock. And this can inch up to 300, 350. It's a slow moving stock. It's not a high beta stock, but a very stable, strong company. So people who want stability in their portfolios can buy on dips. And Heidelberg seemingly is a great company and has been consistently growing. But do not expect fireworks.
Okay, fair point. We've got JSW Steel, which has been active, but unfortunately it's on the lower end of the spectrum as far as the declines are concerned. It's probably the biggest loser on the Nifty 50 as we speak, down about 3% or thereabouts, 3.2%. Ajit Panda has bought 30 shares of JSW Steel at 710 levels, Kunal. He's asking whether he should hold or exit at this stage.
So I think if it depends on the kind of view. If it's very, very short term, then I don't, I would suggest that, you can look at exiting your holdings. But then if you want to move it in a strategic way where you want to have investments into the metal stocks on slightly longer term basis, then you should start converting your, short term positions into more delivery based positions. I believe JSW Steel, Tata Steel, these are all formidable names, and these stocks can do absolutely strong and absolutely well over the longer terms. For example, what happened to the cyclical sector like sugar over the last 2 or 3 years, these stocks have gone to a different orbit altogether. I would sense something very, very similar to happen for many of the steel majors as well. So short term wise, maybe these stocks can go through one more round of correction. The indicators were very, very overbought 1 or 2 weeks back, and which is why the corrections could be very specific to the kind of stocks in that space. But if it's restricted towards if it's extended towards long term, then I would suggest that you can hold on to your investments on JSW Steel and use corrections. Maybe a 10% to 15% drop from the previous swing highs could be a good enough space for you to try and enter up and chip into your investments on JSW Steel.
The next query is coming from Pawan Kumar. He's bought a Canara June 170 call a few minutes back after seeing bullish golden crossover on the charts. He's saying he's already making about 18% returns on it. Wants to know how is the Canara Bank stock looking like? Will it move ahead, move up further? Is what Pawan is asking. Kunal, Canara Bank June 170 call.
I think it seems to be a good prospect. The best part about the PSU banking names, Cheryl, is that the timing of the stocks, because many of the PSU banking stocks are just coming together and giving a very coherent breakout. Now, this is very rare to see, but whenever that has happened, whether it was 3 months back or 6 months back, in the month of September as well as the month of February or Jan end, these stocks had given a very strong and a solid breakout, which resulted into at least a 1 to 2 month uptrend. So I would sense something very similar happening for the PSU banking stocks. And I think in that aspect, maybe a 170 call for Canara Bank would actually play out to be a good trade. I would suggest a price-based stop loss for Canara Bank approximately at 152 levels. That's a very strong and a formidable support. So if the stock holds on to this 152 mark, then I think there is a prospect that the stock can come back to 170, 175 as well.
Okay, there's an interesting query, Vijay, coming in from Sandeep. And Sandeep seems to be an early investor in ICICI Pru. And this is a life insurance company, ICICI Pru Life Insurance. He's bought at levels of 330. The stock is currently trading above 550. He's wondering whether to book profits at this juncture and shift to another stock, or should he stay invested and ride the life insurance story that is expected to play out over the long term?
Well, I am fairly bullish on the life insurance story, and COVID has reinforced the fact that people need to be insured. We are seeing a huge number of people, running in for health insurances and, term life insurances. So I think that this renewed urgency people have felt regarding insurance is very good, because India grossly is a very underinsured country. But again, if you look at the technical charts, I think that if he gets around 570, he should exit once and wait for a correction. And at that point of time, either he can get into HDFC Life or SBI Life, or even ICICI Pru Life is good. But the reality, the fact of the matter is that one should also keep on booking profits. If somebody is maybe a medium-term investor, so profit booking is also very pertinent in such markets where we can see some kind of a correction. Markets have been on a boil since last 1 year. So any kind of a bad news flow can definitely, dent the overall sentiment of the market. So I would say that, keep on booking profits and get into another life insurance story. HDFC Life and SBI Life are equally good companies.
All right, our next query is coming from Sherry, saying she bought DB Realty stock. Wants to know whether the charts are showing any upside coming in for this particular account. Kunal, how is DB Realty looking on the charts?
Well, not attractive as such, because it's been one of the few stocks which has been a very, very late mover as such. I think over the last 3-4 months, the stock has seen a heightened pace, but as compared to the other majors of the real estate stocks, it's been a late mover as such. And as well, I think the stock has made it had a all-time high of almost 400 or 420 or somewhere, and the stock is at 20 odd rupees. So I don't see any major sense on holding on to the investments for a longer period of time. If you want to keep your investments into the real estate pack, then I would suggest maybe shifting up to either an Oberoi Realty or Godrej Properties or Soba Developers. I think these are much more high quality names, and you probably tend to get much more higher returns if the entire real estate cycle actually goes in for a much stronger uptrend over the long term. So I would suggest a shift from DB Realty to some high quality real estate names.
Okay, Vijay, coming to you on this next one. Sangeeta has got a question on Thyrocare. I don't know if I'm remembering correctly, but I think we did have a sectoral conversation on the diagnostic space, and you had said Thyrocare actually looks interesting, right? Sangeeta bought at levels of 988, and she's wondering whether to hold or exit at this point.
We'll definitely hold. I don't see any panic in the chart or the fundamentals. So, we have seen in recent times, for the first time in my lifetime, I have seen that there was so much load on the labs that they refused to do tests. And we all know what our country has gone through. I would say that this business is going to grow leaps and bounds over a period of time. So just be invested, and these are great companies to be in. Lal PathLab, Thyrocare. If there are no major corporate governance issues, I think that these companies should do well, because you never know, anything like Satyam can happen anytime. But again, I'm fairly hopeful that these companies would do well, and just keep on holding the stock. And I see higher levels happening. Maybe 1200, 1300 is also possible.
Queries come from Shanmuga Sundaram, saying that he's bought 300 shares of IDFC First Bank at 54 rupees per share. He wants to continue to hold on to the stock for the next 1 year. He wants to know, does it make sense to hold on to it or no? Kunal, what's your take coming in on IDFC First Bank? The chart's looking attractive.
Well, absolutely. In fact, in the morning show as well, I had given a mid-cap trade on IDFC First Bank. That was from a very short-term view, expecting 65 levels to happen over the next couple of weeks. So it looks very attractive on the short-term charts, and from a longer-term basis as well. I think it's been a top quality stock, had been an underperformer, but I think over the last 3-4 months, it's managed to resurrect itself and managed to break out of some very strong resistances on the long-term chart. So I think you should definitely be holding on to IDFC First Bank. That's what I would advise.
Okay, Kunal, quick view on ABB India. Would you buy at this juncture for the next 2 to 3 months? Ajay wants to know.
Well, you can. I think the stock is nearing a breakout of sorts. Approximately around 1500 is the breakout for ABB India. So I think if the stock manages to oblige that breakout, you can look at least another 100 to 120 rupees on the upside. So you can go for an anticipatory, buy at current levels. But I would suggest averaging on the upside if the stock breaks out of that 1500 mark pretty soon.
All right, the next queries come from Joby Sebastian. He's holding HDFC MC, which he bought at 3,000 rupees per share levels. Needs advice whether he should continue to hold on or go ahead and sell this particular counter. HDFC MC, Kunal, under pressure, definitely much below the 3,000 levels. What should Joby do?
So it's a quality stock, but then, I remember tracking the stock almost 3-4 months back when it was at 3,000, 3,200 levels. It had given a very false breakout on the upside around that 3,200 mark, and post that you've seen the stock just about going through a corrective phase. I think at current levels, I think the best approach is just wait and watch, hold on to investments. There is no need to tinker into the stock rather than exiting and then probably buying back at higher levels. Just wait patiently for the breakout back above the 3,000 level. Whenever that happens over the next maybe 3 months or 6 months, I think that could probably lead to a resurrection of trends for HDFC AMC. So I would suggest a hold as of now.
Coming to you on this next one, Ajay, we've got Shivakumar who's bought AU Small Finance Bank. Would you hold on to this one? He's bought it IPO.
I would say that no point of being with small banks. If somebody wants to be into banks, I think that there are good opportunities in the public sector space. I think that banks like Canara, like Union Bank, like PNB, they give much better opportunities. We have seen what has happened with SBI. Now, SBI's slippages are lower than HDFC. Can you imagine, the kind of result this bank has posted? So probably I would say that, the worst is over for banks. We might see a major up move happening. And mark my words, I think that, public sector banks for the rest of the year should do well. I'm fairly hopeful that, smaller banks which are completely undervalued go there because they have a client base, they have a large business. AU is still acquiring clients, but public sector banks already have a lot of good client base, and they are going to, capitalize that over a period of time. So I think that banks should do well. Get out of AU Small Finance Bank and get into some good public sector undervalued company.
Apologies, I was thinking of my colleague Ajay when I spoke to you just now. Thank you so much for that view, though, and Kunal as well. Thank you so much for joining in and for helping our viewers out. That's all the time we have on this leg of the query segment, but we will be back with more answers to the queries that you have for us tomorrow. So do stay tuned. We're slipping into a short break. Markets holding on to gains at this point. Let's hope that continues. We'll be back really soon.